Hi everybody, this is Dominic Nicoli coming to you with our latest blog, and I just wanted to first of all apologize. It's been a while since we've done a video blog. We're intending to do a new series and we're going to have lots of great information coming to you, so be on the lookout. So in today's edition, I'm going to address the most popular and often asked question that I get, which is how is the market? What's going on out there? And clearly there's been a shift in the market. We are coming off of 4 of the greatest years in real estate. You know, my 22 years of doing this, I've never had 4 consecutive years with this high amount of appreciation, low amount of inventory as we've just come off. This now is year number 5, and things are different, and they're not that bad. It's just things are starting to shift. So I get asked all the time, what's going on? Why is it shifting? What's happening out there? Well, you don't need me to tell you. You're reading the newspapers and watching the news and the internet, and we know we've got a lot of volatility out there. We've seen the stock market have these big peaks and valleys as of late. We had the Brexit issue. We've got an election coming up. It always breeds uncertainty. And then unfortunately, as we all know, we've had these acts of terrorism and both nationally and internationally. And I think all of that adds up to a little bit of fear, a little bit of uncertainty into our market. And as people get afraid or there's fear, they typically pull back a little bit, and I think we've started to see some of that happen. Additionally, we are in year number 5 of the cycle, and since I've been doing this, the cycles typically last about 3 or 4 years. So I think there's just a little bit of caution out there, a little bit of concern, and I specifically wanted to talk about how I've seen it affect our markets. And what we've noticed is that in the upper end segment, which would be about the top 20 to 30% in terms of price point of any given market, we've really seen that market slow down. In fact, in most cases, the top end of each market is really a buyer's market where there's more sellers than there are buyers. If we flip-flop and look at the bottom half or the bottom 3 quarters, it's almost the opposite. It's still a seller's market where there's low inventory still with a good amount of buyers, and it's a very, very healthy market. In fact, I was looking at some of the statistics. I won't bore you with too many of them, but year over year, if we look at prices have almost stayed exactly the same. We haven't seen a price drop. Now, that could be a little misleading because in the upper end, when it turns into a buyer's market, we've seen prices come down a bit. In the lower end, we've seen prices actually come up a little bit. So if you take the average, it looks like we're pretty much equal, but really it's a little bit misleading. If you look at the number of sales, they're actually up over last year, which is pretty incredible. But if you think about it, we had a huge surplus of buyers. So we're seeing some of that surplus be able to fill in with the increased inventory, which was I'm going to talk about next. If you look at the inventory, 2016 versus 2015, we're up almost 30% in terms of the number of homes for sale. So what does that really mean? Well, it's still a good market if you're a seller, okay? It's still a very healthy market. It's just not an insane market. We're not seeing the tons of 20 buyers per house, multiple offers like we saw a little bit last year and the years before. But we are still seeing 2 or 3 or 4 offers for a good listing. We're seeing plenty of demand out there. If you're a buyer, it's a very good opportunity. It's probably the best opportunity you've had in the last 5 years to buy a house. You're not having to compete against so many people, and it just got so difficult, so frustrating for a lot of the buyers out there. So the market's doing great. It's perfectly fine. I'm going to expect we're going to have volatility as we go through this year. I just think there's going to be, the people are skittish. I think we're going to have ebbs and flows with this election, with the stock market, with the global economy, you name it. So just be prepared that we're probably going to have a little bit of choppy waters. But here in Silicon Valley, we've got a healthy economy. It's thriving. We're having lots of jobs. We have lots of people still moving into the area. So I expect we're going to be just fine. As always, if you need anything at all to do with real estate, you need to refinance your house to take advantage of these great interest rates. You need people to work on your house. You need inspections done. You need an appraisal. You need a notary. You're thinking of renting your property. You need a painter. You need a contractor. Or you want to sell your house or buy a house, of course. We call us for everything. We're always here to help and be a great resource for you. We have wonderful people that can help no matter what your real estate needs are. And we are always here and wanting to contribute to you. So call me anytime. If you have anybody that needs to buy a house or sell a house, obviously have them call me. If you guys have any real estate questions, call me. If you need to do any real estate business, call me. I'm always here for you. We always want to help and contribute. And feel free to call me anytime, 650-947-4787. We will come to you soon with more information, more great videos, and that will help and contribute to you. And as always, God bless, and we hope to see you soon. Thanks so much for your continued support.